Good morning, everyone. Good morning, everyone, and thank you so much for joining us this morning. We are very happy to have on 3 or 4 actually brokers with us this morning that also have property management businesses in the cities of Sequim, Port Angeles, and Forks. And so first off, we have Jesse Schubert of Action.
Hi, how are you?
Management.
I'm just listening to this. It should be.
Let me get everybody. Oops. Okay. Everybody on mute there. So Jesse Schubert with Action Property Management, and then also Janet Stevenson of Properties by Landmark. And then also we have Sandy and Shelley of Lunsford Real Estate and Property Management in Forks. I hope I got all of that right. If not, please correct me. So just a few details about how we normally do the coffee and the coffee chat in the morning. And that is that if you have any questions, I like it to be a fairly iterative process. And so if anyone has a question, you can either raise your hand and I will call on you, or alternatively, you can put your question in the chat and you can ask that question. If you'd prefer that I ask your question, you can put that in the chat just to me. And I try to ask that everyone keep themselves on mute if possible, unless you are asking a question. So thanks so much. And we're going to start with Jesse Schubert of Action Property Management. And he's going to talk to us about what he's seeing in the rental market in Sequim. And then also just as a piece of information, next week we're going to have Dylan Godsey on from Serenity House, and he is managing all the tenant relief program money that the county has received. So he's got lots of information about it, and they have received a lot of money for tenant relief and landlord. There's also landlord relief money. So anyway, Jesse, if you want to take it away, I'll go ahead and give you the floor. And thank you again.
You're welcome. Thank you for the opportunity. So I'm going to tell you guys a brief overview about Action, so you have context about this small slice of property management that I know about. I'll talk about the current Sequim market, especially in the past 1.5 years. And I'll finish up by telling you about what's happened to Action during COVID and the biggest impacts that we've seen. So the overview for Action, we've been managing property for 23 years, and I've been doing it for 5 years. We manage residential and commercial property. Our service area includes anywhere within a 30-minute drive of our office in Sequim. So that's Diamond Point, Gardner, all the way to Port Angeles. Not all of Port Angeles, but most of Port Angeles. We currently manage 142 properties, and that includes 131 residential homes and 11 commercial units. In Sequim specifically, we manage 118 residential homes, and that includes single-family homes, duplexes, fourplexes, condos, but does not include any apartments. The average rent for that 118 residential homes is $1,450, and the range is between $525 up to $2,750. Some of those rents include utilities, like especially houses in the county that are on a well or septic, or some homes that have landscaping included. Briefly, I'd like to tell you about who our clients are and who our tenants are. Our clients, we break them down into 3 basic categories. 54% of our clients are investors. So those are people that have purchased property as an investor. They have an investor mindset. They're not planning to move into it. And 20% of our clients purchase the home intending to move into it someday. And 26% of our clients are what we call accidental landlords that maybe inherited the property, or they moved out and just decided to hold on to it, or maybe it could be like a family property that they're managing. So that's the basic breakdown. The majority of our clients are investor types. Our tenants, I broke that down into some categories that might be helpful or interesting. 31% of our tenants are retired, not surprising. 9% are business owners. 7% are medical workers. 7% are teachers. 5% work for either the city or utilities, local utilities. And the rest, 36%, are kind of a broad category of what I just call professional. And those are people that just work for local businesses or nonprofits. And it could range from like a truck driver to a counselor to someone working in retail, paper mill, engineer, something like that. So that's the context. You know, we manage, 118 homes here, but that's certainly not all of them. And I think so that's just the slice that I can speak to. I just wanted to lay that out there. The current market in Sequim over the past year and a half, well, I guess first I'll say over the past 5 years since I've been doing this, rents in Sequim have increased probably about 3 to 5% per year. And it's been about, I'd say around 90 cents to $1 per square foot. And that's a very rough way to price a rental home, but it's one piece of information we use. In the last year, we have seen increases, not rent increases with current tenants, because we haven't been able to do that since June. But when a property comes vacant, or if we have a new client and we're newly managing the property, we've increased rents sometimes between 10 up to 20%. So that's a huge increase over the past year and a half. So now we're seeing rents at about $1.20 to about $1.25 per square foot. And again, that's a very rough way of looking at it. Over the past year and a half, there's always been a big demand for rentals in Sequim, but the past year and a half has been a massive demand and low supply. What I've seen is that there's just that constant, steady supply of people moving to Sequim, either to retire, start new jobs or businesses, and that just never ends. And the problem is the supply. There's just a historic low inventory of properties to buy. And as everyone knows, that there's really high prices. So what I see is less people buying investment properties. We're also seeing less turnover with our tenants. So a lot of tenants are not moving out, sometimes due to COVID, maybe directly, they just want to hunker down. Other times it's tenants that might be in the market to purchase a home, but are putting off those plans because prices are so high. We've gone stretches this past year and a half with no rentals available at all. And that hardly ever happens. Usually in the spring or summer, we have between 5 to 10 rentals available. And it's just, we just don't have anything sometimes. We've seen more come available in the past 2 months. So I don't know if I'll be interested to hear what others say about that. A lot of our clients have been selling. So what I've seen is that I broke down our clients into those 3 categories: the investor clients and the accidental landlords. Those are the ones that typically are selling right now because prices are good. So it's a good time to get out. the people that purchased homes intending to move in someday, they're not selling. Some things that I've heard from clients lately, obviously some have been really worried about tenants' ability to pay. Some people are worried about capital gains taxes increasing, so they consider selling. And then overall, I'd say we lost a few clients because they sold, but now we've been gaining some. So I think all in all, we probably have a net gain of clients even over the COVID. So specifically about COVID and how that's affected action in our clients and tenants. Initially, when the pandemic started, a year ago in March, and there was the lockdown, we had 3 tenants move out right away. So they had to break their leases and move out. And they were all tenants that were small business owners in Sequim. And they, not knowing how long that lockdown would last, they just saw the writing on the wall and it was too much of a risk. So they moved out. All the clients that own the homes were fine with it. And we just had kind of an orderly exit for them. Some of them moved in with family. In the first 2 months after the initial lockdown, we had 2 tenants request payment plans to cover 1 month of rent. And the clients were totally open for that. And those tenants have since paid back that debt long ago. But since June of 2020, all of our tenants have paid on time and in full. So direct impacts for COVID in terms of non-payment of rent has not really been a big factor for us at all. The biggest factors, though, have been just clients selling, especially when a tenant, when there's not that many homes available to tenants, it can be pretty stressful. I've had to deliver some notices in the past few months for clients selling. And there's with nothing available, clients, it can be stressful. So we always try to transition our current tenants in good standing into other properties that we manage. And we've been pretty successful with that, but not always. Probably the very biggest impact on action has been not really the CDC, the federal moratorium, but more the Washington state moratorium. It's evolved quite a bit over the past year and a half. The last version of it included a moratorium on evictions or any sort of, we weren't able to allow or ask any tenant to leave for any reason. And we also couldn't increase rent. That ended on June 30th. So the moratorium that most people know about has ended. And now we've switched to what the governor is calling the moratorium bridge. And that goes from July 1st through the end of this month. And that bridge program does allow us to increase rents. So we have been increasing rents modestly. I'd say about 75% of the properties that we're renewing leases, we've been increasing rents. So, but not massively. Another big impact for us, actually probably the biggest impact, has just been the new legislation in Washington. There were two big changes to the Landlord Tenant Act. And one, the Just Cause Law, HB 1236, is probably the biggest impact. That restricts our ability to ask a tenant to vacate specifically when they're on a month-to-month. We can only ask a tenant to vacate for 16 predefined reasons. So, and those are reasons like a violation of the lease terms, non-payment of rent, or also the owner is moving in as a primary residence, or they're selling. And we can ask a tenant to vacate in those 2 instances with a 90-day notice. So I guess for us, the real biggest impact has been just staying up to date with the landlord tenant laws, monitoring the changes to the moratoriums, staying in compliance, so updating our lease. We did a massive lease update, and then changing our policies and procedures so we can stay efficient and in compliance and just best manage everything to meet our clients' goals. So that's been a big effort. We also let a lot of tenants transition to month during the pandemic, just to give people flexibility, but also partly tenant flexibility, partly because we wanted, in some cases, to increase rent. So we didn't want to lock in rent for another year without an increase. So basically a lot of people went month to month. And so right now, because we can increase rents, we've been getting tenants back on fixed term leases, not only because we can increase the rents, but also because of the just cause law. Having a tenant on a 6 to 12 month lease is much better for us and our clients, because we can end a tenancy with a 60-day notice with no cause. Typically our tenants are good, so we're usually not trying to get rid of tenants, but it's just, we do everything to reduce risk. So having a tenant on a fixed term lease is not only beneficial for our operations, but it also reduces risk. I think aside from that, the other impacts we've had are just dealing with the massive demand and inquiries from people. So that just means lots of phone calls, massive inquiries whenever we have any rentals available. So just sorting through prospective applicants, that can be a lot. And then now that we're renewing leases again, that's been a lot of work, because with renewing leases comes inspections, and with inspections comes work that you notice. A tenant will report things, and you notice things while you're looking around, and that the direct impact, I guess, from COVID, or indirect, has been just having a hard time with the lack of, or just contractors being super busy, material prices like lumber, lack of appliances. So basically all contractors are so busy, it's becoming somewhat difficult to get work done as a result of these inspections. But otherwise, I think we're in good shape. I think a lot of people thought the sky was falling, and certainly I did too. I had no idea what would happen, and my clients didn't either, but things have proven to be okay in Sequim. And that's my 15 minutes.
All right. Thank you so much, Jesse. So Debbie had a question, and I have one as well. Debbie?
My question was, how many tenants in Sequim are on government support programs, if you know that figure?
I don't know about Sequim, but I can speak for our 118 residential properties. We have 0. We've worked with Section 8 and other programs before, but right now we don't have any. And what I find is that the vouchers that are provided, they don't even come close to covering the rent. And if the tenant doesn't have a job and can subsidize the subsidy, then they just can't afford it. But we're way open. We will work with any prospective applicant that works with subsidy programs, but it just hasn't worked out.
Okay, thanks. So Jesse, when you have so say 3 years ago, when you had a new rental listing come available, how many applicants would you get then? And then compare that to today, or more recently during the pandemic, how many applicants do you get?
Sure. It really depends on the house and the price range. So any property under $1,000, there's just always a massive demand. If you go up to about 1,200 to 1,500, 1,700, there's still a massive demand, but it's far less. And then when you go above $2,000, it's less demand. So we've had some sometimes like up to 75 inquiries or even up to 100 for lower priced rentals. Average priced or above average, above $1,450. I have lists, I keep lists of all the inquiries that I get, and it's usually about 25 people. But of those people, sometimes people just inquire and they don't respond back. A lot of people do that, or they read our admin's policy and procedure and they just don't respond because maybe they can't qualify, or they move on and find something else. So it's difficult to judge based on the number of inquiries alone exactly, but I have seen a lot more. I mean, massive more inquiries now.
Okay, thank you. Yeah, I'll be curious to know what you guys think of. I'm going to put in the chat the MIT living wage calculator for Clallam County. And it has in there, which I guess I'll go ahead and share my screen very quickly just to show this. Let's see if I can find it. I cannot find it. Okay, never mind. Maybe I won't be doing that. I don't know why it's coming up like that. I'll try again here. Yep, there it is. Okay, so this is the MIT living wage calculator, and this is the version for Clallam County. And so it calculates what a living wage would be, a poverty wage, and a minimum wage would be for one adult, two adults. And you can scroll across and see what it would be for more adults. And so this, let's see, there we go. They have in here for two adults with one working, the housing, what they calculate as typical housing costs with no children or with one or two children would be, yeah, they're saying the average is $1,000. So anyway, I am guessing that is a bit low compared to what you're sharing, that you're seeing. So which doesn't surprise me at all. I've always thought a lot of their numbers seemed very low. I'm not sure how they calculate it, but that's what everybody uses for grants, and what HUD, if anybody uses anything relative to a program that HUD administers, that's what they direct everyone to. So great. Does anybody else have any questions for Jesse? Well, that was a great overview and I really appreciate it. There may be some more questions folks have following this. So next up, we have Janet Stevenson from Properties by Landmark in Port Angeles. So Janet, can you go ahead and take the floor?
Sure. So I I've owned Landmark since 1998. Landmark has been in business since 1986. I bought the SQUIM office and combined the company back together almost 2 years ago. So I work in SQUIM and Port Angeles and beyond. So I get to kind of compare both markets, the SQUIM market versus the Port Angeles office, and there's definitely a distinction. I would say Jesse's information was very good about the breakdown of what owners look like that own properties in SQUIM and Port Angeles. A multitude of them don't live here. And then you've got the investors who have invested in our community but don't live here. A lot of them do intend on moving here someday. But, and then I think probably the most affected by what has happened over the last 3 years has been those that accidentally became landlords because there was a time, I've lived now through several cycles in this community. We moved here in 1991 and I started working at Landmark as we moved into town. I already managed property in other areas, but when I first moved to town, there were waiting lists. I remember carrying these waiting lists, and we would, as soon as something came available, we would hurry up and call them and see, who fit into that, would fit into that house. And, we've gone through all these cycles. And in the early 2000s, and when market crashed, and then we had, 3 pages of rentals or more. We were lowering rents a little bit and, struggling to keep things rented. And now we're back to the point where it's just so difficult for tenants to find rentals. And part of that has to do with the fact that the market did change. As the sales market, we're a shadow market of the sales market. Whatever the sales market is doing affects us, but it's a shadow. And so when the market changed for sales, a lot of those who were accidental landlords, the prices finally came back up so they could at least break even or not be underwater in the sale price. And so many of those did sell. And at that same time was when the VRBO market was excelling in our community. And so, some of the moderate rentals were bought and remodeled and went into that market. So it just started narrowing out some of the market that we did have as inventory. So in Port Angeles, there's more working class renters. We have a wider variety and range of market of prices and quality of rentals here than Sequim. Sequim tends to be retirement homes, or the market is different there. So right now, with the shortage, part of what I'm seeing is there are people who have realized they can work from home. And there's more and more people moving into our community with higher wages is part of what's driving not only the shortage, but there are people that are truly working from home and moving out of the cities as those get, a little more volatile. And we see more and more of that. And that's been a phenomenon to me to when screening people to see, you judge where they come from. Overall, between the two companies, we manage commercial and residential and multifamily and single family, but the bulk of the market in both towns are single family, because there's just not a lot of multifamily here. So as opposed to the Seattle area where they manage these huge, big multifamily complexes, we have mostly single family, and we manage, but between the two companies, between 800 and 900 doors. Doors meaning, apartment complex that has 14 units has 14 doors. So we manage, quite a bit. And so we see a lot. We see a lot of people who come in. We work heavily. Our market, as Jesse said, is very constant. In times past, there were seasonal moves. People moved a lot in the summertime. It slowed down about late September. October, November, December were just steady. And then it started to pick back up after the first of the year. I don't see that seasonal happening as much anymore. And I think that has to do with the fact that there is a shortage, and people coming in, people don't tend to move as much on those seasons as they used to, is what I see. What has affected us a lot over the last years, as Jesse said, this last year and a half, there has been so many changes. We just had to really listened to attorney forums and our trade organizations to try to stay up on the changes, because they would change sometimes daily. And the notices that you could give, we couldn't make anybody move for any reason. And we saw some abuse of that, but not heavily. I mean, there is lots of money out there to be had for tenants. And in fact, I checked with the Serenity House yesterday. To our county, there was awarded $4.5 million, and only about $1.5 million of that has been used. And that includes for rental, subsidy, and for utilities. So there's lots of money still to be had. And I think that is part of what it's difficult, is that the people who have gotten behind, there is help out there. And so part of our job as property managers is to try to help them get to the money that is out there if they are behind or struggling. And overall, we have had very, very few who have not paid. And I'm thrilled about that, you know, because nobody did know really what was going to happen. And the horror stories, as you hear, you know, owners who own property across the country, that's scary to them. And there have been landlords who've had to sell, but overall, people have tried their best to pay. And with the money that's there, part of our job has been to get them to those agencies. Now, with the bridge moratorium that Jesse was speaking of, and we're really excited kind of about this, because the dispute resolution is going to come on board with us at the end of the month, and the 14-day notices for non-payment, we can start giving those again. And what will happen is the 14-day notice, well, we give the notice, but now we give it to the Peninsula Dispute Resolution as well. And they pick it up from there, and they start working with those clients to try to get them to the agencies that can help them catch up, because there's lots of money to help them catch up. With some tenants, it's just the paperwork. Who knows what the reasons are, but the ones who are still behind, they just need that message that there's help out there. And
so Janet,
yes,
I've got a question about that. Do you know that if there are individual landlords that are out there, are they too required to, or can they send that 14-day notice to the Dispute Resolution Center as well? Are they generally aware of that also?
See, that's I mean, you know, our strength is that that's part of what we do. That's our profession.
Right.
So yes, the private landlords do have that right. This is out there. This is government money to help those who are behind. And so there's a method to do this, and I don't know that all private landlords are aware of that. I was talking to Jeff Davis, who's an attorney in Sequim, recently, because part of the picture has been even the attorneys are not sure what's the laws have changed. We have the HB 2136, but also HB 5160. Both of those changed the law, and the RCW's changed. Massive landlord-tenant changes this year that we haven't seen in a long time.
Yeah.
But with those law changes, I think it's confusing to even the attorneys. So when you go to an attorney, they're still trying to figure it out too.
Sure.
Which is part of why the bridge happened. When the dates changed and changed and changed, and then the laws kept changing, and then the legislature season finally ended. We got these new laws, and boom, it started, you know, the 1st of July. However, the attorneys, nor the judicial system, nor the property manager, nobody was quite ready yet. So the bridge came to help get the process started, and to help the legislature, the local jurisdiction, get on board with what they were supposed to be doing. And that's why the Peninsula Dispute Resolution because the dispute resolution centers all over the state were given this task of helping the tenants get to the money they needed.
Okay,
but
great.
they aren't landlord-tenant attorneys, so
Right.
the bridge was to help them learn to do that.
Understand. Thank you. So I know you've got more to add, but Dylan does have a question. Or a comment. He is on with us. He's handling the TRAP program at Serenity House. So Dylan, is there something you wanted to ask or share?
Yeah, and I just wanted to also thank you, Janet, for your perspective and everything that you're dealing with over there at Landmark. I wanted to say directly to the rental assistance programs that similar to the legislation that has just been changing, these rental assistance programs just keep changing, and they keep rolling out different iterations of them all. And in fact, they are releasing what is known as ERAP 2.0, and it looks like it's going to be here in the middle of October. And they're urging all of the grantees that have received the TRAP funding to now opt out of the TRAP and opt into this ERAP 2.0, because the ERAP 2.0 is going to continue on until 2023. And so with all of that, it's going to go back to some of the guidelines that they had with the original rental assistance program, which makes it a little less stringent of how to receive the funds and how to process the applications. But yeah, so I will have to sympathize greatly with everything changing constantly, because it creates a difficulty of how to market these things and how to get the correct information out to the landlords, to clients and tenants, as to their qualifications for these programs and how they can apply and how these different programs commingle into each other. So, but as soon as we have the contract in hand for this new ERAP 2.0, we will be releasing further information about it. And we're looking, we've to do a little bit more marketing as well, just in town for it. So you'll see more billboards and this, that, and the other. So if you guys, I can think of any way we can be helpful. I've talked to the James and Associates team, and I was relaying to some of your team as well, Janet, that if there's anybody who has shut off notices from PUD that they have brought to you guys, or if there's a 14-day notice that you would otherwise go and post, we are happy to team up with you and go to these sites and do in-person outreach and try to get these individuals signed up as quickly as possible, so that way we can get the ball rolling and keep people from losing their housing.
It has been difficult for because the process, I think with the federal money, has been so long, and there's been some extended time frames as far as getting that money. And my understanding, so the TRAP is the Treasury, the federal money, and the ERAP is the state money, is my understanding. And
Correct.
So the state money is supposed to be easier to get, but it's been difficult, and there have been landlords affected by that. I don't think so much through us, but private landlords, I think, have struggled. And yes, there have been people who've lost their homes in the private market. So really overall, there have been, and the Serenity House has been very good about those when there was a sluggish time, and there has been with money.
Yes, there has.
To help with that. The markets are changing. They're always changing, and I look for it to change again as the sale market softens, and it will. Markets always correct themselves, and so that's with the escalation in rent as it has been. you know, part of our goal is not to overprice things to where we're going to have to drop rents when the market changes, because it will change. You know, we all know things change and cycles happen. And so, you know, we're all learning as we go on that issue, but that's just the way the real estate goes. So.
Definitely. I just want to add one note of optimism of cash flow and the more readiness available of payments going into this new funding cycle, is that finally, for one of these rental assistance programs that require us to pay such large amounts out, they're allowing us to request a certain percentage of the funding each quarter in advance. So that way we have the cash flow to do these payments more readily. So that should definitely change the momentum and the pace of which payments are put out. We haven't had that opportunity before. And we have been working through getting our company, you know, back to where it should be and back to even. And now trying to, with the help of our thrift store and whatnot, build up a little bit of the cash coffer reserve to be able to get further payments and momentum of money out there. So.
Mm-hmm.
Well, I don't want to log everybody's time, so.
Yeah, so I just wanted to so thank you very much, and thank you for letting me speak.
And we'll have Dylan on next week to go over the TRAP and ERAP programs in more detail. So we'll save a lot of that for next week. But next up, we've got the team from Lunsford Real Estate in Forks. So do you guys want to take it? Let's see.
Be Sandy Shear.
Yep, she might be on mute here. Let me check out this.
Colleen, can I say a little bit about the macros of housing to maybe help?
Sure. Go ahead, Sig.
Yeah, so
Sig Tama, he's doing a development in Forks.
Yeah, I'm heavily involved in building products, material, very large corporations. I'm involved with investment bankers and all that. So I get a lot of data, right? And it's all macro, it's not local. So, but to give you guys a really short story is you have 52 million millennials that are in the age of 30 to 40, we'll use round numbers, that do not own a home. So we only build 1.6 million housing starts at the moment. If 2% of the millennials buy a home, a condo, you know, a third car garage, I really don't want to specify what it is, that's 1 million housing starts that would have to happen extra besides the 1.6 million that we're building today. And we're hampered everywhere in trucking, labor, hangers for the second stories to put the floors in are not available, toilet seats, all kinds of stuff is being, well, you have to stand in line to get it, including labor. So fast forward, we get the next generation, which is the Gen Z generation, and they're now 25 years roughly in the average age, and there is 71 million of those. So all I'm saying to you guys is it's real simple. There's a lot and lots of demand for housing coming, and we can't build it fast enough because we don't have all the things that I just mentioned. So there's going to be a lot of pressure on housing going forward, whether it's, you know, meeting the rent payments, finding a home, all those things, unless interest rates change, of course, and affordability index changes on the housing. But it's going to be a difficult time for people that are on the lower level of income to survive these next probably 10 years, honestly. They're going to need all kinds of help. That's all I'm saying.
Great. Thanks, Sig. Okay, Sandy.
Can you hear us now?
Yes.
Okay. So this is Shelley. And I've been with Lunsford's for 5 years now, and I do the property management. We have probably about 106 renters. We're small, you know, out in our community. During the whole COVID and that, since last February or March, we probably only had 2 or 3 people that were affected with not being able to pay their rent, which was just fantastic. And I have to say, for Serenity House and Ole Cap, they're amazing. I worked for Peninsula Housing for about a year, and knew all the different places out there that people could get funding and help in that. So I did do a lot of referring when I came over here for when people do need help in that. So that was really good. I think in our area right now, a lot of places that were sold over the last year and a half, a lot of them went to AirBNBs. Where we become a big tourist area here out in Forks, and we have a lot of school teachers moving out here, a lot of new workers, and no place to move them into. And that's the main problem that we really had this last year and a half. We also have probably 50 owners out of the 106 renters that, you know, have rentals that we do manage for them. And they do want to increase their rents. Our rents range from $425 to $1,500 a month. We need more homes. We do not have enough homes out here. We do have 2 big apartment complexes that we do manage. And right now, the one that we have downtown, which is the Almar building, we're actually doing some remodels in that on some of those. That's a very old building. And we are starting to raise the rent on some of those that we have redone, and they look great. So that's something that we're on board with the owner. And I guess probably for applications and stuff that we do have come in, I probably get about 2 or 3 applications a week. When right before school started in that, we had probably more applications in, and I would still check up with them to make sure that they did find something else to rent, and that, or if I couldn't find it here, it's a small town, we can call around, we can find other personal owners that do their own rentals and stuff, because there is a lot of them here in Forks, and give them numbers, names and numbers and stuff, so that they could get a place to move into. So anyways, but I mean, for the market out here, we need more rentals. That's our main thing. We have a lot of new people moving into town from all over, and even like Sandy could tell you, with the market the way that it's been the last year and a half, I mean, our phones have never rang so much because of demand of wanting to move out here and retire out here, and we just don't have, you know, a lot. So
like you said, a lot of people, what Jesse said previously is that a lot of people can work from home now, so they want to relocate their home where it's not in the city anymore and stuff. So so our market is, the real estate market has been pretty steady too. It's a little softer now, but last year was crazy, just like everywhere else. So, but yeah, so many owners have turned their homes into VRBOs that we've lost those rentals to people that need to live here to work. And so our demand is very, very short.
So Steve Biermann had a couple good questions. Steve, do you want to ask those? And I think these are questions of all 3 of the presenters. So, okay, Steve's asked me to ask them. So what do you guys see as the effect of VRBOs or AirBNBs on the rental availability market? So Jesse or Janet or Shelley?
What is the effect of the VRBOs?
Yeah. How much of an impact has the AirBNB and VRBO market had on the long-term rental market?
It's affected.
It's tremendous.
It's tremendous. I mean, this last year and a half, we've lost quite a few homes to that, and that we were managing, and we had to find them other places to live, which was a struggle, but we did. We did gain a few, newer homes and stuff that we were able to move them into to manage. But I guess it's because of the tourism and that here. I mean, they make more money that way. I know some of the owners wanted to trade, wanted to change. We've lost, and they've wanted to, instead of renting, because they figure out what they calculate, what they're making, a month with someone coming in every day, and that, and they're making double, maybe triple of what they'd make just a year, just renting versus everyday renting. So.
I think it definitely has affected, but I also see that market softening because I think it overexpanded for a while. And I do see that the places like the hospital and the traveling nurses, some of those entities have rented out some of those for the winter time. And that's the thing, mostly a lot of the Airbnb market slows down or dries up in the winter. So there is a market for the off season for the Airbnbs to be rented to some of the other agencies that need furnished places, but they do make a lot more money on the Airbnb.
Yeah, and it actually didn't decline here. It was, you couldn't, through the winter, you couldn't even find, there was people sleeping in the cars looking for a place to stay because all the motels and those also were full. So yeah, I don't know. I guess every area is different, We've just seen a change in ours over the last probably last 3 years in that. So.
I could add that I'm not an expert in vacation rentals at all, but we do get people that call and sometimes will ask us, what do we think about vacation versus long-term? And my impression is that people do see dollar signs with the vacation rental because they calculate that per night income, but there's a lot more costs associated with it too. I mean, you've got to furnish it, you got to pay all the utilities, all the landscaping year round. And if you've got a manager, you're paying a management fee. So I think I would love to hear more about the economics of that, but I don't think that people are making a killing on vacation rentals. I just don't. And I don't think, I think that it's also difficult for people to make that switch because, investing in all the furniture and everything is a big deal. So it's hard to go one way or the other. What I've heard anecdotally from people that I know that have their own vacation rentals is that if you can do it yourself and not hire someone to manage it, and if you've got a special property with a great view or something unique, that can be a moneymaker. But just an everyday home that you might want to transition probably wouldn't make you a whole lot more.
Well, the tax structure is different too, because then you have to start paying hotel motel taxes. And that's the very reason we don't manage short-term, because the tax structure is so different. And I think in the beginning, people jumping on board with the Airbnb either didn't realize that or they were getting away without having to pay those. And I think once it did make it a lot less attractive. And I think that's part of the reason that market seems to me to have softened.
And so is it more VRBOs in our county or Airbnbs? Which market? Okay. And I would think that like more of the small waterfront properties or view properties, small would be typically your short-term rental properties, whereas maybe an in-town home that it wouldn't be on the short-term rental market as often. Is that a fair guess or characterization?
I think it's across the board that people made all kinds of properties.
Okay. And did you guys see, you didn't see many people pull properties off the market from long-term going to short-term, but I've worked with a lot of people that are investors that instead of buying an investment for a long-term rental, they're looking at it as a short-term rental instead. So when they do go into that residential investment market, they're looking at it going in from that perspective, just because there is more money to be made in that. But I also noted that Lindsay put in the chat a link to a recent study that was done. Lindsay, do you want to speak to that, or do you know very much about that study done by the CloudBurst group for Clallam County?
Yeah, so that study, hi everyone, Lindsay Showman-Warren, Port Angeles City Council. That study is by Clallam County. It's a needs and gaps assessment for the homeless crisis response system. And I think the figure in there is that there's over 900 full house short-term rental units in Clallam County, which is about 2% of our housing stock. I'm really interested in this conversation because we're definitely getting asked about how we should or shouldn't, and if we do, how do we regulate short-term rentals? Because I think that is a serious concern. That people are taking, away the rental housing stock. And I'd love people's insights on this call or after the call on, thoughts you have on how government can help to make sure we don't lose more long-term housing.
Yeah, I've got friends and family members that have short-term rentals, and between the two issues that you have to weigh of one, a societal problem where there's just not housing availability for those that have recently graduated or that are just in that entry wage job, and there's no option for them, compared and weighing that against an individual that has some wealth enough that they went to invest in an investment and chose to do their calculations based on a short-term rental opportunity, and then lowering their income for that. I think if you're worried about a community, about a society, you have to look at protecting the people that have the greater need. I mean, they're obviously the ones that are harmed a lot more. And so there was a question here from Darlene. What is BOBO?
Vacation rental by owner.
Okay. Oh, VRBO. Okay. Yeah, we were saying VRBO, not BOBO. Yeah. And so let's see. So I think we've gotten most of our questions asked. I did want to go back to Dylan very briefly. Dylan, we heard that I know Serenity House has received multiple pots of funding through the CARES Act and then also ARPA. Can you give us a high-level overview for rental assistance program or even landlord assistance programs, and how much money has been awarded to Serenity House? And then also, of course, there's funds that have gone through CDBG, which is primarily through Allison Brecky at the City of Port Angeles, and then also OLICAP. But can you do a real high-level overview for some folks that won't be able to join us next Wednesday?
Yes, definitely. So at this point, last year, we received the eviction or rental assistance program monies, which was about $800,000 awarded to us. We served 472 households in that time frame. And then going into this year, we had a little bit of the ERAP monies extended. They gave us about $100,000 extra, which we spent by the end of February, I believe. And we then waited until May to get the Treasury Rental Assistance Program's money. And we, on that funding since May, have spent a little over $1 million serving 379 households.
Let's see. Thank you. So you still do, though, have 3.5 million remaining. Is that right?
For the Treasury Rental Assistance Program, until Commerce has us deobligate those funds when they have us take the ERAP 2.0 monies. Okay. And that those, so just really quickly to touch on these fundings, because they put in a bunch of speculated regulations that they were going to release these monies at, and the Treasury Rental Assistance Program funding was supposed to last about 1.5 years going into September of 2022. And then shortly thereafter, when they actually released the funding, they said the funding is only going to last until December of this year. And so the time frame to be able to get the funding out became much more acute, and we tried to figure out how to get the money out a little bit quicker. So the expectation that this money is just as available as us having cash in the bank that we can just roll out checks isn't necessarily the case. It's like most of those other reimbursement grants where we put about $150,000 worth of rental assistance and utility assistance payments out every 2 weeks, and we're reimbursed along with having to pay payroll and payroll taxes and all those other fun things.
Mm-hmm. So did I get that right? That $3.5 million has to be spent by the end of this year. We have to get that out to all the families in need by the end of December.
So the Commerce isn't going to allow the TRAP program basically to continue for the recipients that they can get to opt into the ERAP 2.0 monies. Okay. So by mid-October, whatever money has not been spent with the Treasury Rental Assistance Program will be deobligated. Okay. And that's the only way that we can opt into the ERAP 2.0 to be able to have this funding to then last till 2023. So
got it. Okay. So Council Member Sherm-Warman, if I gotta get that right.
Hey,
go ahead, Lindsay.
Yeah, you did. So just perspective-wise, during the non-pharmaceutical interventions during COVID, social distancing, renters throughout Washington were accumulating about $100 million of rental arrears per month. That translated into over $1 billion by the beginning of 2021. And so the funds that Dylan's describing are trying to address those rental arrears. Dylan, if you could, I believe tenants and landlords are both able to apply for TRAP, but could you verify that? And also, if you haven't already, put the website in for Serenity House for the TRAP program, please.
Yes, I'll put in the website here in just a moment. And yes, that is correct. It can be initiated by either the landlord or the tenant.
While I'm up, Debbie had a question about mortgage assistance too.
Oh, okay. I don't have too much information on mortgage assistance, as that's not something that we manage, but I believe that OLECAP does have programs that are available for that. Okay, go ahead.
On Choose Clallam First, under community resources, we try to pull together all the different types of resources from OLECAP, CDBG, Serenity House, everything. And that's, I've just put the link there. If you go to Choose Clallam First and then community resources, and if you guys know of any other resources, please let us know. And we try to make sure it's right there. We have the Lifeboat 3, and grants for businesses, other business resources, and there's lots of them. And then, and so from there you can get the different links from, Clallam PUD, et cetera, all the different programs that are available.
Colleen, can I
Yes.
just make a couple of a question and make comments? First of all, part of what has driven the rent increases in all areas, I think, is that the rental, the housing prices, the sale prices have gone so up so quickly, so high, and for an owner to make their properties pencil, you know, the rents have been, that's part of what's driving rents, because of the house, which is what I said, you know, we're a shadow market of what's happening in the sale market. So any investor is going to want to, you know, have as high a rent as they can to help them cover their costs. But also my understanding with that money for the landlords, the property owners through the Landlord Mitigation Fund, it looks to me like all of that money has, if they apply for money, it has to be related to COVID-19, I think.
So not, sorry. For the tenant-based rental stuff, the ERAP 2.0 is going to be financial hardship occurred during COVID-19 and not necessarily because of COVID-19.
Okay. Yeah,
So
I've gone on that site because there's 3 ways you can apply, but it looked like all of them had to be related due to hardship due to COVID-19. And right. You know, that didn't always fit into those categories. So landlords have taken a real hit over the last year and a half.
So we are way past 9 o'clock, 9:08, but this has been an excellent conversation, and I've certainly learned a lot, and I hope it'll continue next week. I hope the property managers will join us and ask some really important questions of Dylan as he presents about the different programs. And we will have information on all the different programs that are out there. And with that, I'm going to go ahead and close our coffee chat for the day. Thank you very much for joining us. I really, really appreciate it. And, you know, we need to get all these resources out to the people that need us the most. And you guys do such a professional job taking care of your clients. So, you know, I think we're talking to the cream of the crop here. So, and you obviously are very knowledgeable about your profession. So thanks so much for your time and sharing this knowledge with us.
Thank you.
Thank you.
Thank you.
Bye, everyone. Have a great day. And we'll see you next week, Dylan.